Hi, this is Dave with Market Trading Concepts. It is Saturday, April the 14th, closing out the week for Friday, lucky Friday, April the 13th. So we had the Friday the 13th close, which was actually quite interesting. And let's take a look and see if we can kind of figure out what's going on in these markets. They've been a little bit volatile, a little bit crazy. Let's expand the daily chart of the Dow futures. And we can see that what we were expecting to happen last week kind of played out, where we had this consolidation in the Starvis box here. And even though we were, technically against the trend here, this kind of played out where we had a short signal in and around 12,900 and I believe that's 64. 64, I could be mistaken, and then it played out all the way down to this target down here, almost to the tick. I mean, that's if you look at that, it's almost to the tick, 12,682. So there was about a 300-point sell-off there, and as I mentioned last week, I wasn't really expecting, at least from an intermediate basis, any more downside, because this trade was against the trend. So as you can see, what ended up happening was this played out. We didn't, we found support as we were expecting, and then we bounced off of that level into into what is now the resistance level. So if you have a look at this, what ended up happening was, here was your breakout point. And then you can see your 20-period exponential moving averages now come down to meet that breakdown point. And what you can see here is now you've got a situation where the 8 EMA, okay, and this could be a potential trend changer. We really need to see here because you have the 8 EMA crossover. Oh, it's hard to write with a mouse here. Crossover the 21 EMA. So what we're looking at now is, we knew that once this kind of played out and we found support here, that this might potentially be resistance back up into this level. So we were looking for this bounce, and now you have a situation where the 8 is below the 21 here, and it found initial resistance here. It found initial resistance, and it started to roll over on Friday. So we had a very strong day on Thursday. This was Thursday. And then on Friday, basically what you had is it gave it all back, or most of it back. So we can look at this a couple of different ways, but really what you want to see now, in my opinion, what I would be looking for rather is, I'd want to see whether or not this is going to do this scenario and then break the low, where it's going to roll lower, and I want to see if this is going to come back down and test the low or break the low. Or I want to see a situation where if the long-term trend is still intact, I want to see a situation where it does this, it puts in a higher low, okay, and then it resumes to the upside. So if you look at it from those two perspectives, from a swing trading basis, I could almost sell you on both sides of the market here. But I think what it really boils down to is you have these two levels that are actionable, if you want to look at this from a swing trading basis. So right now what you kind of have is the dead zone here, okay? I don't know if you guys have seen Christopher Walken's The Dead Zone, but this is your dead zone right in here. So I think what you'd want to see then is, you'd want to see a break of this level, okay, a break below this level to get short, and you'd want to see a break above this level to get interested in the long side. And I don't mean just go with a break, because you can have tests, you can have it kind of slip through a little bit, do one of these, and then you can get like a Wyckoff style spring, which I'm going to get into a little bit later when we look at silver. But you can get one of these kind of Wyckoff style springs where you get, you get a probe in here, you get people interested on the short side, and then it rips to the high side. So you have to be really careful. You have to be really careful. What you really want to see is you want to see, in order for this to confirm, it kind of decisively close below that 12,602 intermediate support level, because as you can see, this is probably a pretty strong level, at least in the intermediate term. You had the lows over here, these Darvas box lows, which coincided with those lows, and that's really why in last week's video I was expecting some support in this area, because you've already moved on a one-to-one basis here, the distance of this box down to this point here, and then you had previous price lows here. You had a lot of activity in and of that area. So you had Darvas box support. You had kind of target support, and I've mentioned in previous videos that once you hit that target, I'm usually looking to see what's going to happen there, and I usually expect to bounce once the one-to-one target is reached in the Darvas box, at least with a significant move like this. So especially since you were against the trend here. Now what you have though is you have this no trade zone, which on the weekly chart, let's just kind of jump over there. We'll jump back and forth a little bit. On the weekly chart, you've got you still have an uptrend here. Okay. So this was a normal pullback within the context of this uptrend, right into these support levels. And then you still have support at 12,573 at the 21 EMA, okay, on the weekly chart. So if you look at it from this perspective, this was really just a normal pullback on the weekly chart. Now, you have some signs of weakness here. If this rolls over, we could get some further downside. But I wouldn't really be too interested until we break decisively this 12,573 level. So it's always important when you're trading to keep your expectations in line with what the higher time frames are telling you. And what the higher time frames are telling you is the support levels on the higher time frames are more important than the support on the lower time frames, in my opinion. So you can see this 12,663 level held. It coincided with the level on the daily chart, and 12,662. So you had a lot of confluence in those levels. So I felt pretty confident that they would hold. So now what is the market going to do? Well, we never really know what the market's going to do, right? So really, in my opinion, you have to wait really for the next setup. For the next signals. You want to see if this is going to follow through here. Now you've got some trending. You've got your days below the 21 exponential moving average. So what I would look to see then is a break of this level. I would look for it to put in another higher, or I'm sorry, a lower low. Okay, a lower low, and then I'd wait for it to pull back into resistance. And we've been saying this for the last few weeks. In order to get interested on the short side, it's going to take a while for these to roll over, and then you're going to get that situation where it does this, and then bang, it's going to come down. So at this point now, if it breaks this level and we get a decisive close, I think the next test of the 21 exponential moving average would probably be a good area to look at getting short, with a stop above these highs. That's what I'd be kind of looking at, with a stop above these highs, because if you get if you're going to put in, just from a chart pattern perspective, if you're going to put in a lower low, and then you look at putting in a higher low, right? Then you would expect, in order for this to follow through, with the stair-stepping action, you would expect this level to hold, in terms of this being a lower high. I'm sorry, I didn't name this properly. This is actually a lower high. I always, if you see me in these videos mess up the terms, just know that that's what I meant. That is a lower high and a lower low. Okay, so we're focusing on lower highs and lower lows now. My bad. So I would look at this kind of scenario to play out if we're going to follow through to the downside. And I say if we're going to follow through to the downside because sometimes you get situations that come into play, big forces like government intervention or what have you, that really can skew the technical picture. So you have to keep an eye on that, and you have to manage your risk when you're trading and say, okay, what's my uncle point? So this would be my uncle point if I were to get short at this point in time. And I think it would be pretty normal that if you had people getting short in this area, the early shorters or the early adopters that recognize, okay, we had the 821 crossing over, this is now resistance. Let's get in here as our first entry. I think generally what you're going to have is, now that it's kind of started to move their way, they're probably going to tighten up stops just above that level, above these highs. And that makes absolute total sense. If you look at this from any kind of chart pattern perspective, psychology perspective, why would you place your stops all the way up here when this is a potential swing point, right? So I think that's really the area where if you break above, you're going to get stop runs for the people that have gotten short. So net, the markets are still buy side, except for these signs of weakness coming in here on the daily chart. And really what you want to see is, if you're going to take the trade, manage your risk, potentially look for this break or look for the next retracement for follow through. This is the logical place for stops, just above here. I think that makes sense. Now, let's have a look at the other indexes and see if they're confirming. I don't think I need to mention again that the risk really is that the weekly chart is still net bullish. I typically don't like to fight my larger trends, so I would keep this in mind. This major support level. So if I was going to take a long, what I would probably, or a short rather, a short based on the daily chart, what I probably would do from a risk management standpoint is look at that 12,573 level and say, okay, if this is working out, let's say if you took the trade here, if this is working out, maybe take off half of your position down at this level, tighten up your stops and see if it's going to work out, or even tighten your stops, bring your stops to break even. That way, if you if you get stopped out, you're going to book half the profit and you're going to scratch on the other half of the trade. So I hope that makes sense. So looking at the ES now, I really need a pen neutral color here because I'm trying to focus on if I'm long side green, if I'm short side red, but I don't want to keep switching the colors here. If you look at this, you've got support on the S&P futures at weekly support at 1327 level. Okay, and if you look at the daily chart, you basically had the same situation come to play. You had the move of the Darvas box down almost exactly a 1-to-1 level. Okay, almost exactly a 1-to-1 level. It found support. It's doing the exact same thing. So the ES is basically confirming what the Dow is telling us, the Dow futures, except that the S&P futures haven't yet rolled over here. So they're a little bit stronger. So now let's have a look at the NASDAQ and see what story the NASDAQ is telling us. So the NASDAQ is a little bit, it's a little bit stronger and it's a little bit weaker, which sounds a little bit goofy, but if you look at it from this perspective, on the weekly chart it's stronger because you're all the way still here holding the 8 EMA. You're holding the 8 EMA, but if you break the 8 EMA, you've got a lot more room to go down to the 21 EMA, which it sits at, on the NASDAQ futures right now, sits at 2543 level. So you had the same situation play out where you didn't even get a squeeze firing here. It's still in a squeeze, which kind of tells me that you could get some more movement potentially to the downside, because what you had here is you had your 1-to-1 box play out, and now you're forming a new box in this range. You had this play out, hit this target, bounce, and now what you have is it bounced above the 21 exponential moving average, and now what it's doing, it's coming right back down here. So if you break this level in and around between 2680 and 2690, somewhere in there, If you break this level, then it looks like you might get more of a push down. So it looks like you have more room to go to the downside potentially, even though net the weekly chart is stronger than the other indexes, but the daily chart seems a little bit weaker now, or it seems like it has more room to kind of follow through and to go. Now, if you look at if you really look at what's probably telling this story, Apple led the advance up. Okay, Apple led the advance up, and now Apple has kind of been leading the advance down. And how do I know that? Well, if you look at Apple intraday, I mean, initially this looks like Apple looks like a good buy entry here on the daily chart, because you've had a lot of this kind of up movement, and then you have a pullback to the 21 exponential moving average on the daily chart. Now I would have caution at this level. I would have caution at this level because of the weakness that all of the indexes are showing. I would really want to see a confirmation that it's going to hold this level, and if I was going to get long this move, I would look for strength on the way back up somehow. I would look at a 60-minute chart. I'd want to see it putting some stair stepping in, higher highs, higher lows, and maybe look for a pullback entry on the 60-minute chart, probably at a minimum, because I think like we've had some big moves here, and you can see Apple is really overdone, and it really has room to come down. It really has room to come down, and if the other indexes are going to fall apart at this point in time, or not necessarily fall apart, but have deeper pullbacks, then Apple could potentially too. So this would be a cautious long for me, and I actually wouldn't just buy it here on this pullback. I would really wait for strength going back up. One of the things that I noticed, if you watch this stuff intraday, what I was mentioning earlier is that, even on the day, on Thursday, we had the stock market moving higher, okay, on Thursday. And then what you had happening in Apple was Apple was actually headed down. So I think at one point the stock indexes were up over 1%, and Apple was down close to 1%. So that was a real warning sign to me. And when I see these, I don't want to call this a previous leader now, but when you see these leaders that have led the charge up, that the market's going up and they're rallying right into resistance, which is what we were doing on Thursday in the stock indexes. That's what we were doing Thursday in the stock indexes. And then you have stocks like Apple, which were the leaders. Now they're kind of leading the charge down, and they're down on the day when everything else is up. That's a real red flag to me. That's a real warning sign. And at this point in time, I think I would look at those, the potentialities. If I can describe it that way, look at those potentialities and look at, potential weakness coming into the market, unless we really hold those bottom levels and really start showing some strength to the upside. And you really will only catch that intraday off of those, probably off those 60-minute charts, or you'll get some sign that, we put in an intermediate bottom and we're pushing higher. Another aspect that I would consider is I'm going to look at the market a little bit differently. I'm going to look at some fibs and see if we can try to make sense of potential direction. Okay, so I'm back on the Dow futures. I apologize, I'm jumping around a little bit, but I think it's kind of necessary. I'm back on the Dow futures, and I'm looking at the daily chart. Okay, so what we can do here is, here's a couple things that I've kind of been looking at in my ongoing daily analysis. So I can draw some Fibonacci retracement lines here, which is a tool that I do use from time to time. So if you look at this retracement that we had down, if you look at the high to the low of this retracement roughly, what you had here is a 50% retracement. Okay, so you had this, let me just mark this here in red. So here's your high, here's your low, and you came down and you retraced 50%, which is where you basically found resistance, somewhere around 12,957. And you can see that that level in itself isn't super important. It's a guideline, but where it really becomes important is the confluence of levels. So what I mean by that is, look at, you've got this Darvas box breakdown. Here's a level. You've got this fib level. Here's one level. Here's two levels. And then you have your 21 exponential moving average. There's three levels. So one, you have your Darvas box low, right, or the breakdown. Two, you have your, and I'm repeating this because I think it's important. Two, you have your fib level, your 50%, which is a key fib level. Okay, your 50% level. And then three, you have your 21 exponential moving average, EMA, your 21 EMA, which to me is the line in the sand between long and short. Okay, for anyone who knows me and knows the things that I look at when I'm trading, the 18, okay, I use a range of 18 to 21 EMA is my line in the sand between long and short on the time frame I'm looking at. So now you have line in the sand here. You know, you have your line in the sand right there. That's really your line in the sand. So I'm getting more into the analysis of this because I think this is a really key concept. Not only do you have your line in the sand, but when you see a lot of these levels come together, you can bet that this is an important technical level. Okay, this is a really important technical level. So this is going to be, this is where the rubber kind of meets the road, technically speaking. So when you look at this and you say, okay, I've got this level here. If we breach this level, and definitely if we breach this level to the upside, the 13,026 in the Dow futures, you know, I already said that a stop above this low would make sense. But even if you probe it and you fail at some point, if you get a decisive close above the 61.8, then all bets to the short side, in my opinion, are definitely off. Okay, I think that's really, you know, unless you get some crazy market action where they probe it, hit the stops, and then they roll over, you know, because you're getting some wacky kind of, what I would consider wacky price manipulation in the markets these days. But you know, that's just my opinion. But this is really, those are the key levels. Okay, you've got this confluence. That confluence is I think really key. It's really important. So jumping back to the fib analysis, then what you have is you've got this high, right, this low. Now you've got a key level that you've initially sold off from. So now what you want to see is it going to break through to the upside, or is it going to follow through to the downside? Okay. You've still got this squeeze in play, which is telling you you've got some momentum to the downside, potentially still in play. If you look at this, you know, you had quite a bit of volume come in right, you know, on this candle. And you're starting to see volume picking up slightly, although I don't really think that's really telling the story. So what you really want to see here is you want to see this key level hold support or not. And you want to see this key level hold support or not for future direction. So I think I've said that enough times. Now let's look at now you had this high to low, 50% retracement. And now what you can do is you can even mess yourself up a little more, and you can throw some more fibs on here, and you can say, if I can find my tools here, Fibonacci tools, price retracement lines. Now let's go from this low, okay, let's go from this low to that high. And what you're going to notice is, I'm just going to zoom in here, what you're going to notice is, if I haven't messed you up enough already, from this more major high to low, you hit the 50% resistance. From this low, or close to this low, to this high of this minor move, now what you've done is you've hit the 50% support. Okay, so there's a couple of ways you can look at this, right? There's a couple of ways you can look at this. So now you know that you have resistance here, based on all the things that we've looked at. You know you kind of have support here. Here's your intermediate support. And what we were looking at, me and some of the members of the trading floor here, we're looking at intraday is, on Friday we had an initial test of these support levels and we bounced up. So we didn't really want to short into those net levels initially. We were interested in shorting, you know, the air, you know, coming down a little bit more. But once we got into this level, this was really a caution zone for us. So this is kind of where the rubber meets the road in the intermediate term, where now you have, if we break this 12,782 level, right, which we just kind of, we really closed at the lows, which is a sign of weakness. But if we get some decisive action, you know, Sunday night, Monday morning, going below this 12,782 level, then what we're probably looking at is playing this air to the short side. You know, this range between your immediate, what's going to become your immediate resistance and your immediate support. So you have a range there of, you know, 100, just over about 120 points intraday that we're going to be looking at, you know, to the downside if we decisively break this level down to there. And then what we're going to do is we're going to get cautious again. We're going to get cautious again on an intraday basis at this support level. So really what we're doing is we're saying, okay, where's the path of least resistance between this resistance and that support? You know, it looks like it might be to the downside if we break this level. Now we've got support. Let's get cautious again. Let's wait and see what happens here. If we break this support level, then we're going to look at where's our next immediate level of support, you know, and how much air do we have to play between those levels. So that's what we're kind of looking at on an intraday basis. From a swing trading perspective, you know, you can give these things a little bit more room to move, and you can just look for, you know, the retracements, and you can play if you're in the short market or in a down market, you can look at, you know, the retracement back to that level and then give it some time to play out and hopefully put that in a newer lower low. So I hope that makes sense. That's kind of how we're looking at it from a swing basis and on an intraday basis. If you have any questions, you know, you can just email or call me at the number on the website there. Let's just look at the transports now and see if they're confirming and if they're telling the same story that the broad indexes are. Okay, so looking at the transports, then the transport index, it's well, we've got a couple of things going on here. We kind of broke this immediate trend line here. You know, you've got some toppy looking action here, and you've kind of broken this trend line here to the downside. So you could be looking at some potential downside, or you could be looking at some sideways action. So that in itself isn't really telling. Now what we do have coming together here on the weekly chart is we've got a squeeze coming into play, and you know, if we have so what we have is a potential Darvas squeeze. We have a potential Darvas squeeze setting up in the weekly chart. So that's interesting to note. The break of this trend line, a potential Darvas squeeze forming. This isn't that telling, but what you have here is on my trend indicator, you have a, you know, that situation where, you know, you've got these highs in place, and then you've got decreasing momentum. So that could signal some intermediate downside. Now on the daily chart, let's expand the daily chart. It looks a little bit more telling. You have the same situation in terms of momentum. Let me just clear this off. In terms of momentum, you have the same situation where, you know, you had this high here, and you've sort of got declining momentum, and that now this is now rolled over to the downside. Okay, you had a Darvas squeeze fire off where you didn't actually quite hit the target down here. You found support, you rallied back up. So what you could actually do is come down here and tag this downtrend line here and this level here where these two levels come together. So it seems to me we could have some more potential downside in the transports, which would kind of bode for a little bit more potential downside in the stock indexes. Now, where I would say that, you know, that analysis is no longer valid, not necessarily wrong, but no longer valid, because we never really know what's going to happen. We're just kind of speculating here. But if we break above these stop levels, these intermediate highs, if we break above those levels, then I would say this is no longer valid. So that's really your actionable zone. You could look at, you know, this level, resistance, stop above here, roll down to this immediate level. So that's really what I'm looking at here in terms of what I think might happen. You've still got this in play. This is favoring the short side. This is favoring the short side. This is now favoring the short side. This is rolled over. It's right at the zero line. It could cross below. That's favoring the short side. So I think that's what we're going to see. That's what the preponderance of evidence is kind of telling me. I think we're going to get a little bit more downside in the transports and probably in the indexes now that I look at this. And what would change my mind is, a move above this level. Okay, so I hope that makes sense. I am just going to take a quick look at bonds now. The 5-year note, we were looking at this potential short following through here in the bonds, and it started to roll, and then it failed with a break above that level. Now it's right back into these key, I guess these would be key resistance levels now, but at this point in time you have no reason to be short the bonds anymore, in my opinion. Unless you're just unless you just think that it's going to come back up here and put in a double top and maybe fail. But to me, that's not really high probability. You have a squeeze forming now. You have a really wide range on the weekly chart. So you have, this is back to blue. So now what you really have is this huge range Darvas box on the weekly chart, and you really don't know which way it's going to go. I would just treat this entire range at this point in time, because it's been so kind of wacky and volatile. It is favoring the long side in terms of, from an indicator perspective. So I would just, and from a perspective of like it's above its 21 EMA on both the daily and weekly, and both above the 8. I mean, that to me is, that's the line in the sand there. We're basically long bias on both the daily and the weekly. So I wouldn't want to fight that. I wouldn't want to speculate that this is a short level, that we're going to do this. So at this point, I would just leave it alone and look for direction outside of this Darvas box on the weekly chart, between 120.116 and 124 even. Okay, so I would just, that's a huge range. I would just leave it alone. At this point in time, it almost seems like any pullbacks, you're starting to build a decent trend here, but you have obvious resistance up here. Any pullbacks might be met with, further buying. So at this point in time, I would just leave it alone. It didn't do what I expected that it was going to do, and I would just look for further direction on the 5-year. Looking at the 10-year there, I'm not sure if I paused the video properly there or not in between screen changes, but looking at the 10-year on the weekly chart, you had an initial short squeeze, Darvas squeeze fire, hit the target, held support, pushed off. That short was against the trend. Okay, that short signal was against the major trend. It played out, and then it held support, which in hindsight, kind of makes sense here. You just had this long bar, and you found support right at the the width of the box. So that's pretty normal. Here you're just at intermediate double top resistance. So I mean, I would wait for further direction there. Okay, and looking at the 30-year, just to round it out, I've got nothing on the 30-year. The only observation that I can really make here is, you're in this huge, fairly big range from like $1.34, or I'm sorry, 134 to like just under 146. And now you're in this really elongated multi-week squeeze, and you're in that really long squeeze, and you can hear my dog snorting in the background. If you can, I apologize. So now what you have here on the daily chart is you've got this higher low put in place, and this push back up. You seem to have some immediate price resistance there. You're above the 21, you're above the 8 and the 21. So kind of the same situation. I've really got nothing on that. Okay, let's have a quick look at the VIX. I kind of jumped over that. The VIX did what we were kind of expecting it to do in last week's video. If you look at the daily chart, what this is kind of telling us is that we were expecting it to go opposite of the stock indexes. So it did that. We had a Darvas squeeze breakout here, which means the market is going to move opposite the VIX. So we had this breakout. We have a target up here. We broke out. We came somewhere up here. We pulled back. We could potentially tag this target here which would also kind of tell us there might be a little bit more potential downside to the stock index futures, the stock indexes in general. We're at resistance here and doji on the week, on the weekly chart. So this kind of is telling a story. You know, we've got to get through this immediate resistance, which would, you know, tell us that we got to get through support on the stock indexes. But if we pop above this resistance level, we could get some further downside. You know, maybe hit some of these targets, get some immediate downside on the stock indexes. Okay, I'm going to take a quick look at the currencies this week. I don't really want to spend a lot of time on them. I don't really have anything really that interesting to say. The Aussie dollar is in this continued downtrend for the time being, but it didn't quite hit this target to the downside from here. And what it looks like it may have done is you've got this trend line resistance on the daily chart. You've got this this high in place. It looked like it tried to come up and test this, but it didn't quite break through it to put in a swing high, or a higher high rather, sorry, a higher high. So it really just came up and tested that level. Question is now, is it going to hold this trend line and push higher, or is it going to roll back over and hit this target? At this point in time, you know, everything's favoring the downside except for the MACD, which looks like it's rolling to the high side. So if you are short the Australian dollar, for example, I'd be very cautious in and around this area. This is that is a buy signal, but it's against the trend on the daily chart. On the weekly chart, you've really just come up here, and you could be forming, you know, a higher low on the weekly chart. It looks almost like a potential 50% retracement from this high to this low, or I'm sorry, this low to this high. So I would be very cautious in and around this area and see which way it's going to confirm. You wouldn't really want to be short above the 21 exponential moving average on the daily anyways. So I would look for direction below that trend line and below the 21, or look for it to put in, you know, some kind of bottom here, and see what it's going to do at that point in time. This is just really caution to me. I wouldn't really do anything at that point in time on the Australian dollar. So looking at the British pound, the British pound, I think a couple weeks ago, we felt that the British pound had several weeks ago, we felt that, you know, it broke this downtrend line, and it looked like it put in an exhaustion kind of bottom. Here you can see that sign of accumulation. It comes back down. It tests there. Technically, it puts in, on the weekly chart, a higher low. I always mess these names up. A higher low. And then it came up here. It kind of did the same thing. You know, higher low, higher high. And now it's just kind of, it's going a little bit, you know, sideways here, but it's holding above the 21 exponential moving average on the weekly chart. Now, if you look at the daily chart, you have a potential move setting up here, and I'm not sure which way it's going to break, but I'm looking at a couple of different patterns here where you have this potential, here you've got it like a higher high, and here you've got a potential lower high, here, and you've got this kind of loss of momentum. You've got this kind of loss of momentum here, and this is kind of rolled over. Now you're in a squeeze. Now you're red on the Hakinashis. So really, I think that like a break below this level here, this Darvas box, if you set up a Darvas squeeze to the downside, I think you could get a fairly rapid move down to these lows. Okay, down to these lows between, I guess this would be about $1, without drawing a line on the chart. It looks like in between 156.50, 155.50, so you're probably looking 156 even. So if you get a Darvas squeeze to the downside based on this kind of pattern, I would expect a pretty rapid move down to this level, but I wouldn't really expect any downside beyond that, because you are against the trend here, and you know, you are technically against the trend here on the weekly chart. but you are in a squeeze. But it wouldn't be unusual to do one of these and just put in, just retest these lows here on the weekly chart. You can see these lows come into play over here, and it wouldn't violate anything here. It would just be a retest of this level here. So that would be the safe move. If you can call trading safe, that would be the safe move if you follow through to the downside here. You've got some pretty decent support in there, but you could get, just a move down to this level. Now, if you ask me, this entire range is inactionable. I would wait for, direction out of this range entirely, out of this Darvas box range entirely. But this looks like it might be setting up. If it confirmed to the upside, then you'd have to look at, what makes sense with the Darvas squeeze breakout to the upside. Technically, it would all be in alignment as well. This is kind of against the trend, but you've got mixed signals here. So you really need direction out of that Darvas box there on the British pound, in my opinion. But I think this is what's going to happen. Okay, taking a quick look at the Canadian dollar. I'm going to get into huge technical detail here. Sideways, leave it alone. Unless you have a good reversion to the mean technique, and as soon as you kind of peg it, at some point it's going to break out. I would just leave it alone. I personally don't like sideways markets. I'm not too interested in the Canadian dollar. It's sitting right around par there. Okay, let's take a look at the euro then, and then we'll get to the US dollar. So the euro is still in this inactionable zone. It's still holding $1.30. So, technically, I wouldn't do anything with this. I would just watch this level. Now we've got this 2 week squeeze here. If it follows through below 130, we're going to get a signal down to this 126.44 level that we've been talking about to test these lows. So I think that that would be in alignment with this trend. So I think nothing has changed this week. Nothing has changed this week on this analysis. Question is it going to break this or is it going to break that? It looks closer to breaking this, but until this support level is broken, it's fairly strong support by the looks of it. Until that level is broken, to the upside or the downside, I really wouldn't do anything with it. It's still in the dead zone here. So now if we come and look at the US dollar, it's kind of the same situation. You have here you have this pattern forming again where you have it's net buy side, right? It's net buy side. You've got a squeeze forming. You have a potential Darvas squeeze taking shape here, and I would look for direction out of this area here. Now you do have some constructive action going on here in terms of here is a higher low, but now you've got this higher low potentially, and you've got this lower high, right? And you've got this higher high. So you really don't have any direction here. Like, is it going to peg this upper level? Is it going to peg this lower level? Is it going to break this box? To me, this is more indecision, and I would wait for direction outside of this Darvas box with the Darvas squeeze firing. So that's exactly what I would wait for. You've got this big range on the weekly chart with kind of the same pattern. See, it's kind of got the same pattern as the daily chart, and to me, that is just you've got a potential Darvas squeeze taking shape. You're losing momentum here. You could almost look at this as this action is tightening. You've got kind of a wedge happening here, and you might be able to get some clearer direction. You might be able to get some clearer direction with a break of one of these wedge patterns on the daily or the weekly chart. Is it going to break down? Is it going to break up? Which may give you some early indication before it even breaks out of the Darvas box. But to be honest with you, I would wait for a clear break of the Darvas box because I think you're going to get enough movement out of that in order to make a proper decision and not get faked out with maybe a breakout of a wedge pattern. Okay, let's take a look at the gold futures this week. The gold futures have this series of stair-stepping in place, you know, these lower highs and lower lows in place at this point in time. And right now you're testing these levels here right at trendline resistance. So on the gold, now you have an initial short squeeze here that fired off, and that also triggered an initial Darvas squeeze short at the 1630 level, and now you've come all the way up to, you know, the 1680, 1660 level. So the initial short of that signal, the initial break of this Darvas squeeze was met with some major support, and it's not unusual to do like one of these situations where you pop up and you don't violate the top of this box and then you roll back over. So in my opinion, gold is in a really interesting kind of precarious place, because really what you want to see is if it breaks above these highs, obviously the move is over, right? If it breaks above these highs, the move is over. You've got this Darvas box forming here. I think the second break of this 1630 level would be a go with to me. If you break this level decisively, that's just, I mean, decisively is a go with. But even if you break this and you see some action intraday that is pretty weak, you know, now you've got a new Darvas box, but the original signal was at the 1630 level. So I think if you broke this 1630 level, and definitely if you break the bottom of this Darvas box and you form a new Darvas squeeze, then I think I think that would just be a go with. Now that said, you had obviously some pretty strong support down in there, and now you've got some constructive action on your MACD, giving you some, you know, intermediate buy signals. So you know, this is a momentum type market. If it breaks this level, it'll probably go momentum, and it would probably follow through. I would expect it to anyways. I would expect it to follow through if it breaks that again, and we'd be looking at those targets of around 1550 or 1560 on the downside. On the upside, if you get through that, then you'd have to be looking at a potential you know, Darvas squeeze reversal taking place if you you know, fire off to the long side. So right now I think gold is in the dead zone. It's in leave it alone mode, and I would just wait for direction out of that Darvas box as well. You know, you've got around, I guess that would be 1680 to the upside, 1620 to 1630 to the downside. It's a pretty wide range, but you're going to get some movement once it really gets going. Right now it's just not really doing anything. If we look at the GDX, you can see that the GDX fired an initial Darvas squeeze short on the weekly chart. Okay, you can see it here. 2 weeks ago, 2 bars ago, that's 2 weeks ago, and you have a potential target down in this 40 range if you project this box on a 1-to-1 ratio down. So you have you know, some potential signals that gold might be weakening or may continue to stay weak in the GDX. Okay, I want to spend a little bit of time on silver here because we've been really in the room, me and one of our members in particular have really been looking at silver closely intraday. So when I look at silver, what we had here was we had an initial short signal here. Okay, we had this low here at around 3107. 3107 in silver seems to be a really key level. So we had 3107 here, and then we had an initial break of 3107 that fired an initial Darvas squeeze short. Now we still have this potentially in play. We're back in a squeeze now. The trend is lower. Now we've got the MACD, which is kind of not giving us any real direction, and it may be trying to form a bottom here. But what we had, I think what we had here was maybe a mini version of a Wyckoff spring situation take place here. You had a little bit of higher volume here, right, on this huge down bar, and you didn't follow through. You had a situation where you bounced up to resistance, intermediate resistance, you came down, you tested it again, and you can see those signs. You can see these signs of accumulation in here, and this could be a potential, this 3107 may have been a potential Wyckoff spring area. Okay, for those that are familiar with that concept, where you get this this low, and then you get, you know, a high volume flush out, and then, you know, and then you hold that level. So then we had a return all the way back up here to resistance, and then you had a sell-off on Friday. So Thursday was an up day, Friday was a down day. So now what you really are, you're in this big kind of range here, between like what is this, 3240, 3260 on the upside, and then 3107 on the downside, which is a pretty big range for silver. The other thing that we were looking at was you had this, from this, originally what we thought was going to happen was we thought we were going to get this situation here where you put in a low, and then you put in a higher low here, and then you put in a higher high here. So what we thought was going to happen was maybe a little pullback, and then we were going to get a move to the upside, and then things got really precarious, where all of a sudden, boom, you had this huge down bar right into the support level. Support initially held, although it didn't look like it was going to, you know, this potential spring area. And now what you have here is we're just kind of looking for direction out of there, and you know, we're kind of looking at different techniques to see if we can see where this is going. You know, initially we had from some of these more major levels, which I think we talked about last week, from some of these more major levels we were trying to see, okay, we had a low down here, a high here, we had a 50% retracement right in this area here. We have the 618 at 3054. So a failure of that level would really kind of confirm, you know, that we're going lower in silver. You know, we've got the 3107 level, the 3055 level, roughly. So if we break that 3055 level, I think that would be enough of a confirmation that the 3107 level, key level, wouldn't be holding. And I think we would look for, at that point, we would look for a follow-through of the Darvas squeeze short that fired, you know, going back several days. So if we don't hold this level and we come back up and we break through 3107 and definitely through 3055, I think that we're going to be looking for this these levels around $29. So it's a kind of if this happens, then, you know, that will probably happen situation, because it's really hard to tell. We really need to get some direction out of this Darvas box that's forming now. So we would get either a follow through of the Darvas squeeze to the downside. If we actually break through the top of this, then what we would be looking for is, you know, this is the key level that held at 3107, and we'd be looking for, you know, prices higher, you know, potentially to hit these targets of 3530. So so in a nutshell, what I'm saying is it will probably pay to be cautious in this range now, and to look for direction out of there, because once you get some real direction out of this fairly big range, you're probably going to get some significant movement. You know, you've got 35.30 to the upside, you've got $29 to the downside. That's some pretty significant movement, and it probably pays to be patient and wait for, you know, follow through of those levels. So I hope that makes sense. Intraday, what we were looking at, I just want to highlight this as well. Intraday, what we were looking at was, you know, we had another situation where we had, you know, that 50%. I'm not going to draw it in here because it's really messy, but, you know, from this high to this low in here, we had basically, you know, a 50% retracement in here. And then we were looking for, you know, now we're having kind of a 50% retracement of this level as well. So there's some, you know, there's some people that are really looking at fibs And those fib levels are acting as some pretty major levels, you know, from these high and low these high and low points. You know, so you had this move here, 50%. Now you have this move here, 50% of that high and low. So it'll be interesting to see, you know, really how this resolves itself. And I hope that all makes sense. It's a little bit messy on the chart here. Okay, we're just going to take a look at a quick look at a couple of other markets, quick for me anyways. So let's take a look at crude oil. On the weekly chart, you have this kind of sloppy trend line here, which seems to be holding. You had short signals on the daily chart, and we were talking about it in the room here. And I said that I think there was a level of about 100. I said intraday there was a level of about 100, and I believe it was 88. And I wasn't interested in shorting there because I thought we had pretty strong support there. And we hit that level actually, even though we didn't follow through the full target here to 99.87, which I think would be even stronger support. But this 188 level, we were too close in between these levels, you know, a dollar spread in between these levels, that there really wasn't any downside. I felt there wasn't really any intermediate downside left in oil. And then what happened here on this day, then we just bounced right back into resistance. So now you're at a kind of a decision point again where you've got these you know, these lower highs in place here and potentially a lower high here. So if you were going to get short oil in this area, I think that would really need to be your uncle point, these swing highs here. So at this point in time, I don't really know which way it's going, but I do know that this 188 level is pretty strong support. So you may, if you do get a retest down to that level, I'd be watching, you know, to peel off, you know, at least half the position there and tighten up your stops because, you know, unless it cracks that level, it doesn't seem like you really have a lot of downside below that. But now you've just rallied right into resistance. So on the weekly chart, you're still holding support. You're holding these levels in here at the 21 EMA. You don't really know which way it's going to go there. You've got this 8 EMA coming on top of you, 21, you know, providing your floor here. Your 8 is your ceiling here on the weekly. Your 21 is your ceiling here on the daily. So at this point in time, I would really wait for some, you know, some further confirmation, at least on a 60-minute chart, to see which way you're going to go. And on the 60-minute chart, you're setting up, you know, a potential Darvas squeeze, so you might get some potential downside here. You know, you might get some potential, a little bit of downside, maybe back down into this level here. Outside of that, I really wouldn't try to hazard a guess of what it's going to do. Okay, let's take a quick look at the grains and then wrap this up for the week. The grains to me look pretty, I mean, the uptrend is really nice. Beautiful uptrend in the soybeans. But I'm actually looking at this resistance level and this doji on the week as a potential intermediate top. Now, a doji in of itself is not a reversal signal, although some people consider it that. But it is definitely, you know, a pause. So we're going to get a pause here. Need to see if we can break through this 1456 level to the upside, or you know, if we don't get through that resistance level, then what you would expect to happen is for the market to say, okay, we're not getting through this resistance. Where's the next level of support? Where's my next level of liquidity? Your next level of liquidity on the downside is probably this 8 EMA at 1373. Definitely 1398 on the daily chart at the 21 EMA. And then you've got, you know, potential levels even lower of 1312. So that's what I'd kind of be looking at in the short term. I know this is a pretty key resistance level. Even if you get through it, you've got another resistance level right in here. So I wouldn't really be looking for that much upside, even though you're in an uptrend. I'd be probably looking for it to pull back down into some of these areas where it will probably find some buying support, at least for a bounce. Okay, because you are in an uptrend. So that's what I'd kind of be looking at, but I'm not really looking at a lot of upside there. Okay, net, you know, net we're long side bias. You've got some, you know, potential topping action here in your MACD. you know, you've got the MACD here on the weekly still looks pretty strong and is now coming back above the 0 line. So I'm not really sure. I would expect, I wouldn't want to buy the highs here hoping it goes higher. So I would probably wait for a deeper pullback here, here. Okay, but I wouldn't really try and catch the top and short it because you're in such a strong uptrend. Taking a quick look at corn. Corn isn't very interesting here. It's just really sloppy. You had this limit up move. You gapped up from that limit up move here that happened going back the other week. And now you're just back into this range. You know, you're just right back into that range on the daily chart. The weekly chart looks a little bit sloppy, sideways, not really interested in it. Let's have a look at wheat and see if wheat looks any different. You know, wheat's really in the same situation. It fired a potential, it fired a kind of a long here, and then now it's firing a short signal here with a potential move down to these lows. Honestly, you know, the weekly, it's just really sloppy and messy. I would just leave it alone. I wouldn't want to trade that. I think there's really no clear direction on which way it wants to go. The soybeans seem to have led the charge up. The corn and the wheat have just been really kind of, aside from some crazy, you know, limit moves, have been really, really just sideways and messy. So that's all I have for this week. I'll be back again, you know, probably next Saturday. Looking forward to this week coming up. We're at some fairly key inflection points in the stock indexes where, you know, we really need to get some direction. Are we going to continue lower? Are we going to find support and push higher? The metals as well have some pretty key support resistance ranges setting up there. So we really need to see how the next week is going to unfold to get some further direction, at least on a swing trading basis. Intraday, I'm just going to be looking at, you know, what they're doing intraday from the 5 to 60-minute charts and see where, you know, we can play those pockets of air between the major support and resistance levels. We've got a good team that's building here at Market Trading Concepts in our floor, in our live trading floor. We've been really analyzing the markets, really looking at some finer detail on an intraday basis. We have some upcoming meetups coming up as well. Feel free to have a look at that on the, I believe it's the 29th of April. We're going to be doing part 2 to technical analysis here on the 29th of April. So that's coming up in, you know, in 2 weekends, not next weekend, but the weekend after. So, you know, there'll be another reminder going out for that. And we'll look forward to seeing you guys at the next update.